Hello students, welcome to my channel Kitty's Commerce Classes. Today again company accounts, accounting of share capital, part 11. Today we will discuss interest on calls in area and calls in advance. A question has been given. A company limited issued 4,000 shares of rupees 10 each. Payable as rupees 3 on application, rupees 3 on allotment and rupees 4 on first and final call. The application money received on 1st April 2019 and the other installments just after 3 months from the last installment. The application money received for 4,200 shares, out of which 200 shares were rejected. One shareholder who was allotted 50 shares paid final call with allotment money, and another shareholder did not pay allotment money on his 40 shares, but which he paid with first and final call. The articles of association was silent about the interest on calls in area and calls in advance, but the directors agreed to charge or allow interest at a maximum rate as per table F of the Companies Act 2013. Give journal entries. Answer in the books of A Company Limited. First, collection of application money. On how much shares application money will be collected? 4,200 shares at the rate of rupees 3 each. Accounting entry will be bank account debit to share application account 12,600. Narration will be being application money received on 4,200 shares at the rate of rupees 3 each. Now application money will be transferred to share capital account and excess refunded. So share application account debit, same 12,600 transferred to share capital account. To share capital account it will be 4,000 into 3 12,000. Refund will be to bank 200 into 3 600. Narration will be being application money on 4,000 shares at the rate of rupees 3 each transferred to share capital and excess application money on 200 shares at the rate of rupees 3 each refunded as per board's resolution number ... dated ... Now allotment money due on 4,000 shares transferred to share capital. Accounting entry will be share allotment account debit to share capital. It will be 4,000 into 3, it will be 12,000. Narration will be being allotment money due on 4,000 shares at the rate of rupees 3 each as per board's resolution number ... dated ... Now 50 shares paid the final call with allotment and 40 shares did not pay the allotment money. Accounting entry will be bank account debit, calls in area account debit. Calls in area will be 40 shares at the rate of rupees 3 failed to pay, it will be 120. To share allotment account given in question 12,000. To calls in advance account, it will be 50 shares paid the final call money at the rate of rupees 4 each, it will be 200. So 12,200 minus 120. So bank account debit will be 12,080. Now share narration on allotment will be being allotment money received on 3,960 shares at the rate of rupees 3 each. Final call money on 50 shares at the rate of rupees 4 each received in advance. An unpaid amount of 40 shares at the rate of rupees 3 each transferred to calls in area account. Now call money due on 4,000 shares at the rate of 4 each. Accounting entry will be share first and final call debit to share capital 4,000 into 4, it will be 16,000. Now collection of call money on 3,950 shares at the rate of 4 each. and calls in area on allotment of rupees 40 shares at the rate of 3 each realized, and called in advance on 50 shares at the rate of 4 each adjusted. Accounting entry will be bank account debit, calls in advance account debit 50 into 4 200. To share first and final call account it will be 16,000. To calls in area 40 into 3 120. So 16,120 minus 200. So bank debited will be 15,920. Now interest on call in advance account debit to shareholder account, being interest allowed on call in advance at the rate of 12% per annum. Call in advance given in question, given in the calculation 200 into 12% into 3 by 12. It will be how much? 6. Accounting entry, interest on call in advance debit to shareholder account. Now interest on call in advance paid, accounting entry will be shareholder account debit to bank with same rupees 6. Narration will be being interest on call in advance paid. Now interest charge on calls in area, accounting entry will be shareholders account debit to interest on calls in area account. Interest on calls in area calculated on 120 into 10% into 3 by 12, it will be 3 rupees. That accounting entry will be shareholder account debit to interest on calls in area account rupees 3. Continue. On 1/10/2019, bank account debit to shareholder account, being interest on calls in area received rupees 3. Now one note has been given. As per table F of Companies Act 2013, a company can charge interest on calls in area at the rate of 10% per annum. Number 2, as per table F of Companies Act 2013, interest on call in advance is payable at the rate of 12% per annum by the company.